Navigating the twists and turns of global manufacturing and technology these days,
Yeah,
it feels like it's constantly throwing new challenges our way, doesn't
it
it?
really does. It's a complex landscape out there.
So to try and get a clearer picture, today we're diving into the recent Q4 FY25 earnings call and financial results from Tata Technologies.
Right. A good indicator for that engineering and tech services space.
Exactly. And if you're keen on digging into all the raw details yourself, the earnings call recording, the investor deck, press release, all the financial results are up on their website and filed with the stock exchanges too, of course.
Yeah, plenty source material there. So, our goal today really is to pull out the most important insights from all that.
Hmm.
We want to understand how Tata Technologies actually performed, what their strategic thinking is, and how they see the future shaping up, especially with the global economy doing what it's doing and tech moving so fast.
Basically giving you the key takeaways without having to wade through, well, hundreds of pages of reports.
Precisely. A clear, focused view.
Okay, let's kick off with the big picture then. The full fiscal year, FY25, we've seen so much global economic volatility, trade tensions, AI really taking off. How did Test Technologies actually navigate all that overall?
Well, it's interesting. If you just look at the headline number, it's about 1% year-over-year revenue growth in Indian rupees, which sounds okay, maybe a bit modest,
Radish.
but you have to look a bit deeper. If you adjust for a specific project, the WinFast project, which wrapped up in FY24.
Ah, okay, so a one-off impact.
Exactly. Once you adjust for that, the underlying growth, it actually jumps to 12% year over year.
12%. Okay, that paints a very different picture. A much stronger core
It
performance.
really does. It shows the resilience of their ongoing business activities,
Sure.
stripping out that completed project.
And it wasn't just about revenue growth, right? Their profitability looked quite healthy too. That EBITDA margin, 18.1% for the year.
Yes, that's a key metric.
Right.
EBITDA, earnings before interest, taxes, depreciation, and amortization. Basically a measure of operational profitability.
Right. And hitting 18.1% and maintaining that kind of level when there's so much global uncertainty, well, it suggests they're managing things pretty effectively on the operations side, wouldn't you say?
Absolutely. Yeah, holding on to a robust margin like that, it really points to good cost management, operational discipline.
Hmm.
And alongside that, we saw them secure a significant number of large deals throughout the year. 17, I think it was.
17 large deals. Any standouts?
Definitely. There was one really substantial contract worth over $500 million.
Wow. Half a billion. That's definitely noteworthy.
It is, and it wasn't just about landing, brand new business. It looks like they're also getting deeper into their existing client relationships.
Also,
Well, they increased the number of clients who contribute over $1 million annually. That went up from 41 in FY24 to 44 in FY25.
okay, so not just adding logos, but actually expanding the work they do with their established base. That's a good sign.
It's a just growing trust and a wider scope of engagement, yeah.
All right, let's zoom in a bit now to the last quarter, Q4 of FY25. What were the key sort of trends and results just in that period?
So what's particularly interesting in Q4 is you see a bit of a split story between their two main business segments. You've got services and then technology solutions.
Okay.
The services business, which is the bulk of it, right? About 80% of their total revenue, that actually showed resilience. It grew sequentially by 1.1% in Indian rupees.
Which is basically flat in constant currency US dollar
Pretty
terms.
much, yeah. Flat QOQ in constant currency. So
Yeah.
stable performance there despite any, headwinds.
Okay, but the other part, the technology solutions segment, that saw a contraction, didn't it? I remember seeing that. Quite a big one.
It did, yeah. Down 14% sequentially.
Oof. What drove that?
According to the earnings call, there were a couple of main things. First, some clients pulled back a bit on discretionary spending, which hit their products business.
Ah, okay. Belt tightening.
Seems like it.
Yeah.
And second, their education business, they partner with these Indian Industrial Training Institutes, ITIs.
Right.
Well, there were some delays in getting the infrastructure ready at some of those ITIs, and that affected their ability to execute on existing orders in that education vertical.
Got it. So a mix of client spending caution and some execution delays on the education side.
Exactly.
But despite that dip in tech solutions, their overall profitability actually improved in Q4, didn't it? Sequentially.
That's right, yeah. The overall EBITDA margin actually ticked up, increased by 40 basis points compared to Q3, hitting 18.2%.
So managing costs well, even with the revenue mix shift.
Seems so. And if you look further down the line, Profit before tax was up 14% quarter over quarter, and net income grew 12% quarter over quarter. So a healthy bottom line improvement.
And that joint venture with BMW that started showing up on the bottom line too.
It did indeed. They called out a net benefit of 12 crore rupees from the BMW JV in Q4.
Which sounds like a lot. How significant is that in context?
Well, they mentioned it accounted for about 4.6% of their pre-tax profits in the quarter.
Okay, so already making a noticeable contribution.
Yeah, and the commentary from management was that they expect this JV contribution to become, increasingly significant as they move into FY26.
Interesting. So that partnership is ramping up nicely.
Seems to be a clear example of how these strategic collaborations can start feeding through financially.
Oh, and stepping back again, thinking about that broader context,
Right.
how is Tata Technologies positioning itself or navigating this whole global landscape? The trade tensions, the geopolitical shifts we keep seeing, and maybe remind us, ER&D is engineering, research, and development.
That's right, engineering, research, and development. And, well, if you connect the dots, the entire ER&D sector is operating right in the middle of this dynamic environment.
Right.
There are definitely growth opportunities out there, but yeah, considerable challenges too, especially around tariffs, international trade disputes. That's creating uncertainty.
So what's the expectation for manufacturers in this climate?
The general feeling, and what Tata Tech seems to echo, is that manufacturing companies will increasingly look towards sort of regional diversification of their supply chains and operations.
Spreading the risk.
Spreading the risk, exactly.
Yeah.
And also seeking more, let's say, cost-efficient ways to innovate, finding that balance.
And it sounds like Tata Technologies feels their own setup, their agility, gives them an edge here.
Precisely. They really emphasize that agility, being able to adapt quickly. That's positioned as a key strength in this kind of environment.
Do they expect smooth sailing, though? Or are they bracing for bumps?
Oh, they definitely acknowledge potential bumps. They mentioned seeing perhaps some short-term uncertainty that could lead to clients delaying decisions a bit.
Makes sense. Wait and see on big investments.
Right. But their fundamental belief, they stressed, is that the long-term need for investment in new products, new manufacturing capabilities, that's not going away. Companies have to keep investing to stay competitive.
And they made some internal changes recently, too, right? To sort of sharpen their focus.
Yes, they did. Back in March, they shifted to what they called a more customer-centric structure, setting up dedicated account teams, for instance.
Okay, more direct alignment.
Yeah, and they also strengthened leadership in some key areas, like their big partnerships with Tata Motors and JLR, and also in that critical embedded electronics and software space.
And the tech side, AI and IP.
Big focus there, too. They explicitly mentioned investing in their own intellectual property, particularly around AI solutions and intelligent manufacturing platforms.
So building their own tech assets.
Exactly. All these moves, the structure, the leadership, the IP investment, they're designed to make them more responsive, drive innovation faster, and importantly, make sure they can scale up effectively.
Okay, let's dive into demand. How are things looking across the different industries they serve? Automotive is usually the big one for them, right? How's that sector looking globally? Seems a bit mixed.
That's a very good way to put it. Mixed. It really varies by region. In the US, for example, you're seeing kind of a balanced strategy now, still investing in traditional engines, but also hybrids and EVs, of course.
Right. Not all in on EVs just yet for everyone.
Not entirely, no. Then you look at Europe, and there's more uncertainty there, partly due to tariffs, evolving industrial policies. That's causing some hesitation, some delays in investment decisions over there.
But the long-term trend is still towards electric, autonomous.
Oh, absolutely. The medium to long-term outlook for ER&D spending in electric, autonomous, connected, sustainable mobility, that remains strong. And Tata Technologies clearly believes they're well-positioned.
How so? What are they offering specifically?
They highlighted their offerings around software-defined vehicles. It's huge now, focusing on the in-car software platforms, connectivity, and also their AI solutions.
AI in the car?
Yeah.
What?
Things like AI-powered systems for better driver assistance or optimizing vehicle performance, managing battery life in EVs, that sort of thing. They feel those capabilities put them in a good spot to capture that future spend.
Okay. What about their other big sectors? Aerospace, industrial heavy machinery. How's demand looking there?
Those sectors are actually looking pretty robust right now, especially aerospace.
Oh, yeah.
Yeah, their aerospace business had really impressive growth. They mentioned it nearly doubled its revenue in the full fiscal year, FY25.
Doubled. Wow.
And even in Q4, it grew 8% sequentially. They have a strong order book. They seem to be executing well.
What's driving that aerospace boom? Post-pandemic recovery. Defense.
Probably a mix of
Yeah.
factors. Recovery in commercial aviation is part of it, yes. Increased defense spending globally could be playing a role too. Whatever the drivers, they sound confident about continued positive momentum there heading into FY26.
Okay, so aerospace is a definite bright spot.
For sure. And industrial heavy machinery also showing robust demand.
It's always helpful to look at concrete examples. What kind of specific deals did they win in Q4? What does the work actually involve?
Yeah, they gave a few good examples. One is with a North American EV manufacturer. They're helping them modernize their ERP systems. That's the core business management software.
Okay, aimed at efficiency, supply chain visibility.
Exactly that. Improving operational efficiency, getting better transparency into the supply chain. Critical for an EV maker.
Makes sense. What else?
Then there's a project with a big global tier 1 auto supplier. They're developing advanced software for them, specifically focused on optimizing how energy flows across battery packs in commercial EVs. Very specialized work.
Battery management is key.
Absolutely. Another one, setting up an offshore development center for a global car OEM. That covers product engineering support, embedded software development, digital enterprise solutions, and significantly, also helping that OEM optimize costs.
Right, the cost optimization angle is always there.
Always relevant. They also mention leading the complete design and development of interior and exterior trims for a facelift vehicle program for an Asian OEM.
Okay, so core vehicle engineering work too.
Yep. And shifting to aerospace, they won a deal with a North American Tier 1 supplier there, designing and developing a hydraulic test bench and power pack, basically equipment for testing landing gear components, and also upgrading their PLM, product lifecycle management systems.
So testing and systems work in aerospace.
Correct. And finally, back to the education sector we mentioned earlier. Despite the ITI delays, they highlighted ongoing partnerships, like with the Uttar Pradesh government to upgrade 62 ITIs eventually, and signing an agreement, an MOU, with RV College of Engineering to set up an innovation and training center.
So still committed to that skills development piece.
Very much so. It feeds their talent pipeline too, of course.
We've touched on AI a few times. How central is that becoming to their strategy and offerings? Are they just experimenting, or is it really being deployed?
They made it clear they're moving beyond just experimentation now. It's about execution, deploying AI across the product value chain.
Like where specifically?
They gave examples like using AI for predictive maintenance in manufacturing plants, anticipating failures before they happen, or using AI-enhanced object detection in various industrial settings.
And are they seeing results? Is it making a difference?
They claim their proprietary AI framework is delivering measurable outcomes, yeah. Things like reduced scrap rates in production, improved machine uptime, faster throughput, tangible benefits.
So building it into their services.
Absolutely. They stated a commitment to embedding AI across their services portfolio. And it ties into another point they emphasized, evolving into a more IP-driven, platform-led organization. Meaning developing their own reusable platforms and solutions, not just doing custom work for every client. Areas like software-defined vehicles again, embedded software, battery management, overall vehicle architecture. Building those core assets.
And the BMW joint venture fits into that.
Right.
Since it's very software-focused.
Exactly. They pointed to the faster-than-expected scaling of that BMW JV, which is heavily focused on software development, as kind of underscoring the strategic direction. The JV's success reinforces their IP-led approach.
Okay, let's circle back to the financials just for a moment. Can you recap some of the key numbers? FY25 and Q4.
Sure. So for the full fiscal year, FY25, consolidated revenue was 51,685 million rupees. That was up 1% year over year, as we discussed.
Right, with the underlying growth being stronger.
Correct. The services part of that was 40,274 million rupees, also up about 1.1%. Then for Q4 specifically, consolidated revenue was 12,857 million rupees. That was actually down slightly, 2.4% sequentially.
But the services part grew.
Yes, the services segment grew 1.1% sequentially in Q4, hitting 10,241 million rupees. And as we noted, that EBITDA margin stayed consistently strong, above 18% both for the quarter and the year.
And cash flow was a highlight too, I think.
A major highlight. They generated their highest ever cash flows in the company's history during FY25.
That's significant. Strong cash generation gives them flexibility.
Absolutely. And related to that strong performance, they're rewarding shareholders.
Dividends.
Yep. They proposed a final dividend of 8 rupees 35 paise per share, plus a special dividend of 3 rupees 35 paise per share for FY25.
Okay. And their overall financial health. Balance sheet.
Looks robust. They ended Q4 with a strong net cash position, about 174.7 US dollars. Good liquidity. And another operational metric, DSO, days sales, outstanding.
How quickly they get paid.
Right, that actually improved, down to 81 days, so collecting cash efficiently.
What about headcount? Growing, shrinking.
Headcount was relatively flat, actually, ended the period at 12,644 employees. One interesting shift, though. The offshore revenue mix improved up to 43%, so more work being done offshore.
And attrition. People leaving.
Voluntary attrition saw a slight uptick, came in at 13.2% on a last 12 months basis.
Okay. And you mentioned their focus on training earlier.
Yes, they put some numbers on that too. Delivered over 750 technical training modules through their internal platform, TechWare City, and they made a point of saying over 60% of their engineering talent is now considered AI ready.
Wow, 60%. That's a significant upskilling effort.
It really is. Shows that investment in people is a core part of their strategy to handle things like AI and software-defined vehicles.
We also heard from the CEO and CFO on the call. What were the main messages they wanted to convey? Their overall tone?
The overall tone, I'd say, was one of cautious optimism, especially about the medium to long term. Both the CEO and CFO expressed confidence in the prospects for automotive ER&D spending down the line.
Despite the current choppiness.
Despite the current choppiness, yes. They also naturally highlighted the strong profitability and cash flow they achieved in Q4. And they reaffirmed their commitment to, staying disciplined operationally while still making those necessary strategic investments for future growth. Balancing act.
Right. Okay, finally, the Q&A session. Those often give you some extra color, some candid insights. What were some of the interesting nuggets for our listeners from that part of the call?
Yeah, the Q&A definitely added some useful context. For instance, when asked about their optimism, they linked it directly to positive, ongoing conversations with clients. They're seeing signs that investments that were maybe put on hold might start moving forward.
But the tariff issue is the big question mark.
Exactly. They acknowledged that the recent tariff announcements, particularly from the U.S., have injected a dose of uncertainty into the near-term picture. They're hoping for more clarity fairly soon, maybe in the next month to 6 weeks.
And if that clarity comes?
The feeling is that deal sizes, which might have been impacted by the uncertainty, could bounce back once the regulatory and trade environments become clearer.
Did they talk about winning business related to cost cutting? As clients tighten belts?
Yes, they did see potential opportunities there. As companies focus more on their absolute core activities, they might look to outsource more of their engineering services work to partners like Tata to save costs. So that could be a tailwind.
Interesting. What about the different sectors? Did they compare automotive versus aerospace outlook for FY26?
They did. They expect aerospace demand to remain strong and potentially outperform automotive in terms of growth next year.
Okay. And those large deals won in Q4, when does the revenue from those start flowing in?
Good question. They clarified that those big deals were mostly in automotive and some other sectors, not education. And the revenue ramp-up is expected mostly in the subsequent quarter, so not an immediate Q1 boost necessarily, but building through FY26.
Right. Takes time to scale up big projects.
Exactly. They also talked about adapting to their client strategies. If a major client shifts manufacturing locations or changes their mix of propulsion tech, Tata Tech needs to evolve with them to protect and grow those key relationships.
Makes sense. Any insights on specific regions? U.S. versus Europe versus China?
Yeah, a bit of geographic flavor. The U.S. seen as having pent-up demand, but everyone's kind of waiting for that tariff situation to become clear. Europe showing maybe some early signs of improvement, focusing on supply chain resilience, responding to regulations, and the China market. That still appears quite robust, with a strong focus among Chinese companies on international expansion.
So if this tariff uncertainty clears up soon, say in the next 6 to 8 weeks, what's their expectation?
Their hope or expectation seems to be a return to the kind of demand environment they were anticipating before the tariff announcements, with improvement potentially starting from Q2 onwards.
And the pipeline for big deals still looks strong.
They said the large deal pipeline remains strong, yes. But converting that pipeline into actual signed deals, the timing of closures, that's definitely contingent on getting more market clarity.
And pricing. Are they having to discount heavily to win deals?
They stress they're maintaining a disciplined approach to pricing, so not chasing deals at any cost, trying to hold the line on value.
Okay, that's a lot of ground covered. So If we were to try and boil it all down, what are the really key takeaways from this deep dive into Tata Technologies' latest results and their outlook?
I think, in summary, you see a company demonstrating pretty solid resilience in what's clearly a challenging, complex global environment. They delivered respectable financial results, especially on profitability and cash flow.
Right.
They secured some significant new business. Those large deals are important for the future. And strategically, they seem to be positioning themselves quite deliberately for growth with that clear focus on software, on AI, and on key verticals like auto and aerospace.
But with a dose of caution.
Absolutely. The leadership sounds optimistic about the medium to long term, but that optimism is, understandably conditional. It hinges on how some of these current global economic and trade uncertainties play out.
Yeah, that makes sense. One thing that really jumped out at me during our chat was that aerospace growth.
Yeah.
Nearly doubling revenue in a year. That's quite something.
It really is.
And coupling that with the BMW's joint venture scaling faster than they thought.
Yeah.
It does highlight some specific areas where they seem to have real momentum right now, doesn't it?
Absolutely. Those specific points of strength, they really underscore that their diversification strategy might be paying off and that they can capitalize effectively on certain market trends when they arise. It's not just about the automotive sector anymore.
Definitely food for thought.
Yeah.
So maybe here's a final thought for you, the listener, to mull over. Given everything we've discussed, the global trade dynamics, Tata Tech's strategic shifts toward software and AI, the aerospace success, what potential emerging opportunities might they be really well positioned to grab in the next, say, 1 to 2 years that maybe weren't explicitly spelled out today?
That's a great question to ponder.
Definitely something to think about.
Yeah.
And of course, if any of these points really piqued your interest and you want to go even deeper, all the source materials, the earnings call, the presentations, they're all available on the Tata Technologies website for you to explore.
Yeah, digging into the originals is always worthwhile if you want the full, unvarnished details or insights on something specific that caught your attention.